Hi there, Serial Trader here. Let's have a check-in with the major U.S. indices heading into this coming week. Now, since the last video, not a whole lot has developed. I believe on Tuesday we had a gap down at a fairly negative close for the day. And then on Wednesday we had a little bit of a bounce attempt, but then again a fairly weak close. Although closed higher for the day, fairly weak close as far as intraday price action went. And then Thursday was holiday Thanksgiving, so no trading on Thursday. And then Friday we had a fairly weak day and certainly a close down near the lows of the day, which was close to the open actually, so fairly large range to the upside being rejected. Despite looking perky initially. So basically, right near the low of the range here in the low 2600s, around 2630. The actual close was at 2632.56. So we're right in the range to challenge the October 29th low, which was at 2603.54. Now, I don't know how much weight I really put into these, in particular, these three trading days, Tuesday, Wednesday, and Friday, since it was a fairly light week as far as volume went, and usually not a whole lot directionally happens during a holiday week. Although I will say there often tends to be a little bit of a bullish bias to these shortened holiday weeks, and we didn't really see that. In fact, we saw a lot of selling into strength and a lot of weak closes, despite that normally kind of seasonal bullish bias. So maybe that is some indication of the bearish conditions that persist here. But looking ahead to this coming week, I really do expect at least a challenge of this 2603 level. And then if we convincingly break below that, obviously we're looking for much lower prices in either a wave C scenario down or a wave 3 scenario down. Either way, we're looking for significantly lower prices than what we currently have. But anything can happen. This is trading. This is markets. Certainly nothing written in stone, despite this looking very convincing currently for further downside. So what if we do come down and we just test 2603 or slightly break it, and then we have a quick recovery and start seeing some strength again? Well, that'll mean that at the very least the short-term bearish scenario is off the table, and we are either going to have a more complex correction upwards, as I've discussed before, or somehow we've put in a significant bottom and now we're going to work a new bull trend. From a trading perspective, it doesn't really matter yet because there's not enough information to analyze to make any kind of confident call as to that. But just looking ahead, very likely that we do challenge the October 29th lows, and depending how things react upon that challenge will determine whether we are in fact heading down strongly in a deeper pullback here, or whether we just had a false breakout to the downside and now we should be looking higher again. So we'll keep an eye on it, but for now the chart is definitely still favoring continuation to the downside. And just for a little short-term wave count, maybe we have again 1 down, 2 up, 3 in progress with an acceleration gap, which is common in a wave 3 in progress, then we'll have a 4 and then a 5 down, and then either for C or for 3. It's going to depend how deep this goes as to whether we evaluate this to be a C wave or a third wave down. So we'll continue watching. At this point, if we did make a slightly lower low with no follow through and start recovering, RSI would likely do what's called a bullish divergence. Okay, and that means we would make a lower low in price but a higher low in RSI. So that would be a bullish signal if that's what happens, if we don't get a nice flush down upon breaking these levels. If, keyword if. And we would also have the bullish divergence on MACD if in fact we just had a slight break to new lows and no follow through and then we started recovering. These MACD moving averages would also show a bullish divergence. At this point you can't currently call it a bullish divergence because we haven't actually made a new low in price, so it's only natural that you wouldn't be making a new low in your indicators. The divergence only occurs if price makes a new low, but they do not confirm. And even if price is going to go much lower, they won't confirm right away. But if we really start heading down strongly, as we should, if it's a third wave, then you won't see that divergence. In fact, you'll see new, extremely oversold levels. But again, we don't know yet until we see how the reaction takes place upon testing those October 29th lows. To me, the least likely scenario at this point is to not challenge these lows, find our higher low here or right away, and start reversing upwards. That seems unlikely, and I say that just from a trading perspective, and I know how things go as a trader. There are probably so many people trying to go long with a stop just below the October 29th lows, and whether that be on the indices or on individual names, there's a lot of stops pooled here around these lows. So I highly doubt they'll go unmolested being this close to the current price. So that's why I think it's just so likely that we at least test and possibly break these lows. Even in a more short-term bullish scenario, that seems to be a probable scenario. So that being said, probably done here with the wave chart for now. Again, not really a big update from the last video because there just hasn't been a whole lot of price action, or at least meaningful price action, being that it was a shortened holiday trading week. But still had to put some context as to what's been happening. Now, with that being said, we'll go to the Thinkorswim candlestick chart, just to have a quick peek from that perspective. And you can see that we're now in the oversold condition on the daily oscillator, although if we break the October 29th lows and have good follow-through, oversold can stay oversold for an extended period of time. Just like in a strong uptrend, you can get overbought and stay overbought and just keep going for a long period of time. So oversold doesn't mean buy, and oversold doesn't mean it's the bottom. It just means that it's oversold. Now, if you start coming off the oversold condition after just, marginally making new lows, that might be a little more significant. But again, we'll see what happens. Now, just from a candlestick perspective here, daily, well below the T line, well below the 3T line. In fact, the 3T line now appears to be serving as resistance, and we're not even testing the T line of resistance anymore on these little bounce attempts, which would be expected if we are heading down in a third wave. You'd expect the acceleration of that move to stay further away from the regular T line and maybe use this 3T line as it's moving more quickly. And yeah, you just see some fairly significant long upper shadows on these candlesticks, rejecting higher prices intraday. You see closing near the low end of the day's range. That was a little trend that we had on our shortened week last week. And Friday, long upper shadow and a very small real body. So nothing overly clear. Another thing, there's really no reason to be looking bullish here, unless you're trying to catch a falling knife, which some people are, until you see a candlestick buy signal and a close back above the T line, and we just don't have anything like that. I don't see any bullish engulfing candlesticks. I don't see any piercing candlesticks. I don't see anything like that. All I see is weakness and significant resistance being served by the 3T line and before that the T line. So it's bearish until it isn't. Now let's look at the weekly candlestick chart for SPX. See if there's anything here. And big red week on SPX there. So again, the weekly T line serving as nice resistance, and actually now we've closed well below the weekly 3T line. We got oversold, not quite oversold on the weekly oscillator here. Had our little 2-week bounce attempt there, and that's all it was a 2-week bounce attempt. And now we're rolling back down again. So weekly starting to cross back down, not in the oversold condition yet. So that gives you the green light for further weakness from a weekly perspective. And yeah, this isn't a particular signal as far as the weekly candlestick we just finished, but you opened here, close to the weekly T line, closed near the low of the week. Large range, big red candlestick. So it looks bearish. Okay, that's good for the weekly. Done with the daily here in SPX. So we'll go with the NASDAQ, the Dow Jones Industrial Average. Check in with that chart there. And the daily on the Dow, very much the same picture as SPX. Had a nice gap down there last week, and just negative trading after that, and all the little bounce attempts getting rejected, closing near the lows of the day each time. And actually the Dow is quite close to its October 29th low as well. So it's likely that we test or exceed that. And if my wave 3 scenario plays out, then greatly exceed it, but we'll see. Daily oscillator in the oversold condition at this point on the Dow as well. Okay, the weekly candlestick chart on the Dow. Let's have a look. Okay. So the Dow, well below the weekly T line, weekly 3T line, well below that as well. And everything's just curling down, pointing downwards. Weekly oscillator nowhere near the oversold condition. In fact, that 2-week bounce just worked off a little bit of an oversold condition, and now looks like we're rolling back over again. And just a big red week for the Dow, closing near the lows of the week. So certainly doesn't look bullish here on the weekly candlestick chart. Okay, that's probably good for the Dow. Go with the NASDAQ composite. And let's have a look. Okay, so NASDAQ composite daily chart. So from that gap down we had on the daily chart for the NASDAQ composite, we've come up to fill that gap, and it looks like we're coming back down again. We are in the oversold condition on the oscillator currently, and the NASDAQ did make a new low below the October 29th low, but so far not a whole lot of follow through. But maybe we just had to come up and close that gap before rolling back over again. Still not even testing the T line at this point. The daily T line as resistance, and in fact the weekly 3T line is now serving as resistance. So still looks bearish here to me. And again, what would change my mind? Well, at least on a short-term basis, to become a short-term, bullish trader, it would certainly take a lot more to convince me longer term. But a short-term bull perspective, I'd have to see a candlestick buy signal, such as a bullish engulfing, and a close back above the daily T line. And that's just not there yet. So why be bullish until you're given a reason to? Okay, now on the weekly candlestick chart, what am I seeing here? Weekly candlestick chart for NASDAQ composite. So we've been very weak on the weekly chart here for the NASDAQ composite. The weekly T line serving as stiff resistance, and in fact haven't even touched the weekly T line in 2 weeks at this point, and well below the weekly 3T line. And look at that, we actually made a new low for the week as well. A new low on the weekly chart, so we got below those October 29th lows. Weekly oscillator not yet in the oversold condition. In fact, it got oversold, just came up to cool it off a bit with that 2-week bounce. And heading back down, not oversold yet though. So this still looks very weak on the weekly chart. Definitely looking for continuation. And again, at this point, any bounce attempts may find resistance on this weekly 3T line, but if not, I would certainly expect some resistance on the weekly T line, as it's been working quite well since we begun the downtrend. Alright, that should be good for the NASDAQ. And okay, back to the daily chart. Anything else to say about that? No, it's good. Okay, well, let's have a quick look at the VIX before I end the video. And okay, VIX. So the VIX still trying to get its little uptrend to continue. Made a higher low there on VIX at 18.1. And Friday we closed at 21.52 on the VIX, so still well above 20 on the VIX. It would be nice if VIX could really give us a signal here, but right now it's kind of on the fence. It's not strongly breaking out, but it's actually not, pulling back to a point where it would look safe for the stock market either. So VIX isn't really showing its hand here. A strong break, I would say, above this level, which is 2884. A break above that would be extremely bearish for the equities. And I would say a break below this level, which is just above 16 on the VIX, 1609. A break below that, we might entertain that there's some more significant strength coming back to the market. But right now, just kind of on the fence there with VIX, no clear signal. All right, and before ending the video, just a a remark about my current position. Still just holding the put back spread. Haven't made any changes yet. Obviously looking for that strong breakdown and follow through below the October 29th lows. But if that doesn't happen, if it goes and tests the lows and finds support and starts reversing, and not only reversing, but say a candlestick buy signal and close above the T line, at that point I'll probably just take the back spread off the table and reassess the situation. But yeah, for now, no changes. Let's see what happens this coming week. All right, Serial Trader signing off.